Hello my friends, welcome to the very first episode of 404 Logic Not Found, where we break down a series of epic fails, stupid moves, hot takes, and generally illogical happenings in the world of technology, cryptocurrency, and more. Oh, and we're going to have a great time along the way while we're doing it, and that said, it would certainly be illogical not to subscribe to the channel and hit the bell notification button, because who doesn't like to have a great time? So thank you for that in advance. But finally, if you do have a suggestion for future episodes of 404 Logic Not Found, please do comment the story down below or the idea down below for a chance to get shouted out as a contributor on future episodes. So with that, let's hash it out, shall we? The very first absence of logic that we'll be tackling today is none other than the good old get-rich-quick culture that, in my opinion, the advancement of technology and the prevalence of fancy schmancy apps has only made worse. It would seem that an increasing number of people sign up for a service like Robinhood to buy their very first stock after watching a classic clickbait "Become a Millionaire off of dividends with these two stocks" video on YouTube. And the expectation that that brings is often that one is going to get rich without trying and without any knowledge. Unfortunately, manifestation and 2 shares of AMC will not make you rich, and many people attempting to trade options or sinking money into the stock market during frenzied bull runs triggered by Wall Street bets have a much higher chance of getting financially ruined than they do getting rich. And that's a 404 Logic Not Found in and of itself. But you might be thinking that I'm being harsh and heck, maybe even hypocritical because, hey Hashoshi, you've in the past said that investing is a great way to make money and to grow your wealth. And you do it, so why is that so bad? Why is downloading Robinhood so bad? See, it's not about the action of investing or going to start investing. That's fine, that's good. It's about the reasons and expectations for getting into it. That's the challenge. Generally, if your sole focus and reasoning for attempting to invest in stocks for the first time, or crypto, or real estate, or commodities, if that is to get rich and to get rich quick, then you will likely not achieve that goal at all. Apps like Robinhood or crypto exchanges might try to make you feel like you can get rich quick by using their service emotionally, but that fallacy is what will prevent you from reaching your goal. The true means to get rich is to do so in a strategic, well-informed way, which means that you will also realize during that pursuit that growing wealth takes time, years of time, particularly if your budget does not allow you to invest any significant amount. Getting rich is also achieved by learning how to mitigate risk and to take calculated risks to avoid catastrophic losses as much as it is about making good investments. There are things that one does not take into account when they get sold on the vision of moons and Lambos and Rolexes and the trappings of wealth when they unlock their free stock for signing up on Robinhood, because one is so focused on the result that they miss the process, which is 99% the lion's share of the whole thing. Remember, get rich quick culture on social media and in the tech world is selling you on the results that you cannot achieve without the work, the education, the plan, and most importantly, the execution. And it doesn't happen overnight. In other words, the get rich quick culture is a solid 404 Logic Not Found. But folks, it is time for Tech Worldwide Information Today, or TWIT, the totally serious and definitely not satirical news about all sorts of tech topics. I'm your host, Hashoshi, and again, these are totally not jokes. Recently, the eccentric billionaire Elon Musk shocked the world when he announced that he does not have interest in going to space, despite constantly talking about shipping humanity to Mars. Reportedly, he is concerned that while in space, he will miss a massive Dogecoin pump opportunity. Market manipulation memes just don't post to Twitter fast enough from low Earth orbit these days, or at least not yet. In a recent quote, Elon admitted his penchant for pumping crypto by stating, I quote, "When the price of Bitcoin goes down, I lose money. I might pump, but I don't dump. Remember, you may need to see a doctor if you do not have a bowel movement for more than a few days." Not that type of dump. Cut. In a bombastic billionaire Bitcoin debate broadcast live online, Twitter Chief Executive Officer Jack Dorsey asserted that he loves Bitcoin because it cannot be affected by one single person or group, forgetting that he was speaking next to Elon Musk, the single person who destroyed the Bitcoin and cryptocurrency markets with a single tweet. And meanwhile, the US Department of Homeland Security just released new guidelines for how pipeline companies, and that is oil pipeline companies to be very specific, must protect themselves from ransomware. These new stricter guidelines are likely in response to the ransomware attack on the Colonial Pipeline earlier this year, which gave shameless meme reposters on social media yet another excuse to use this meme that is totally overused and featuring a Cheeto, making it one of the most overused jokes besides the 3 funny jokes on this past 5 seasons of Saturday Night Live. Reports that came out of Tesla's recent earnings call outline the company's unique way of getting around the world's chip shortage by writing custom firmware in a matter of weeks to be compatible with a variety of different chips. The mainstream media is currently still waiting for comment from the major chip companies Frito-Lay and Kellogg, who appear to be unable to comment on the matter. Something about the wrong chips. I don't know. In other news, TikTok, the popular short-form video app that is attracting millions of people around the world, just released a new, more realistic text-to-speech system for creators on the app, as if we need more ways for 13-year-olds to promote Robinhood stock trading in a robotic voice. Thank you for watching. I've been your host, Hashoshi, and this paper is completely blank. So next up today, I want to talk about another new segment, actually. I come from the tech world, and I've been in the cryptocurrency space for, 10 or 11 years now. And one of the most promising technologies to come out of this space is zero-knowledge proofs, which effectively let one prove that they know the value of a given variable or some piece of data without exposing that value or data to other parties. It is a powerful tool, but today we're going to shift around the words a little bit to move the proof to the beginning and talk about an example of what I like to call proof of zero knowledge. To qualify for proof of zero knowledge, there's often a hot take or a pattern that is based on what seems to be, zero knowledge on a given topic. So here we go. In the wake of the global pandemic that has, of course, triggered much controversy and much financial destitution and the like, one of the big shifts to our daily life has been really millions of people moving towards remote work, where they sit at home to do their jobs from outside of the office. For many, this is amazing because there is no better place to pretend to work than from home. For others, it is a huge headache to be away from their team dynamic. And for others yet, it is hardly a change worth worrying about. However, across the spectrum of these different mindsets, there is one thing that seems to be unanimous that would appear companies around the world just can't grasp. Teleconferencing has quickly become the life-sapping bane of employees' existence. Not because teleconferencing itself is bad, but because it is overused and abused to the point of it being the workplace equivalent of an open-door policy in a first-year college dorm. Many publications highlight stories of employees who find themselves drained and unable to actually complete work tasks due to the sheer volume of needless video-enabled teleconferencing sessions. Even with this apparently obvious signal, or what you would think would be an obvious signal, companies seem to be unaware of why they aren't seeing productivity metrics that they want, or why employees are reporting low morale and energy. In this quest to figure out how to empower employees and get results, you'd think listening to employees would be a fantastic start, right? Instead, teleconferencing is still employed by many companies as a primitive tool for talking about work rather than actually doing the work, and it seemingly shows that there is zero knowledge of how it can be actually used more effectively in many cases. Have you experienced this in your own job? I would be very curious to hear your thoughts. Please let me know in the comments down below. For the second serving of Zero Logic today, though, folks, we are headed into the depths of the cryptocurrency world to talk about a conundrum that I cannot personally grasp, and that is why in the world the Polkadot and Ethereum communities in crypto just love to hate each other. For those unfamiliar with the whole concept here, on one hand you have Ethereum, a wonderful and quite frankly dominant blockchain network that hosts much of the world's decentralized finance, or DeFi, and NFT related activity. But it is marred by high fees and poor scalability, which is driving efforts to implement Ethereum 2.0, the next generation more capable version of that blockchain. On the other hand, you have Polkadot, which is, funny enough, built by one of the principal engineers and thought leaders behind Ethereum in its early days, Gavin Wood. Polkadot has created and is continuing to build a full-scale interoperability network layer that will connect the world's currently fragmented blockchain networks all over the place, these little dots, and connect them together to create a unified blockchain ecosystem. And we can all get behind that, right? I mean, of course, it seems that the two communities, though, seem like they just can't play nicely together, implying that one must die for the other to succeed, and trying to win one over on each other in exchanges over social media or other mediums. To me, this is in complete contradiction to the reality, which is that in the future, a fully functional Polkadot network and a speedy Ethereum 2.0 network together could complement each other to their greatest strengths. Ethereum's rich ecosystem of users, applications, and assets could be exchanged freely over Polkadot's interoperability network, and in turn, bring new users to Polkadot and its own set of other blockchains that interoperate with each other. This is like strawberries fighting with bananas, which are totally great and all by themselves, but when blended together, you have a truly far superior combination that is better in every single way. Yes, Polkadot and Ethereum together are as appealing as a strawberry banana smoothie. So let's cut it out with this silly game of my chain or my fruit is better than yours, which is you guessed it, 404 logic not found. So folks, thank you so much for watching this very first episode of the 404 Logic Not Found standalone show. If you liked it, please share it with your friends or on social media so they can see it too. And if you have feedback, please leave it in the comments down below. This series is going to occur every other Wednesday, so I will see you 2 weeks from today if you're watching it on Wednesday, of course. And if you have some time to stick around, please do check out this past weekend's episode of Crypto Over Coffee, my weekly crypto and tech news show. It is full of relevant insights and information that helps you navigate the muddy waters of cryptocurrency. Have a great rest of your week, and I'll catch you on the next one. Cheers. For many, this is amazing because there is no better place to pretend to work than from home.